Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today our guest is Jim Monk. Thanks for being on the show, Jim.
Glad to be here. Thanks for having me on.
Jim is the president of CLOZZITS, a leading manufacturer and installer of closet systems for the multifamily industry. As president, Jim's goal is to differentiate between the normal amenities and tap into a new area of construction development, renovations, and property management. Jim is changing how investors, owners, and managers look at closets, which can provide an immediate rent increase. Jim, it's just incredible business model here, I think, or just helping us think outside the box a little bit. It's not something that many of us have probably thought about, is that little space back in the bedroom that could be increasing our NOI. And I'm looking forward to you helping us think through that a little bit. I bet many listening have not thought about the value that could be created there. Get us started though with a little maybe about your backstory and how CLOZZITS, began, and let's dive in.
Well, I guess I'd start off with, I didn't start on this path. It's been a windy one, as most of us, it works that way. And for myself, as a passive investor in real estate, I was talking to a friend of mine that happened to be in the renovations industry for multifamily. And like a lot of your listeners, Whitney, it's always, what can I do? What are you seeing out there? What can I do to move the needle? And we had done already all the hard surfaces, the flooring, quartz or granite. And as a passive investor, I was looking at going, what else is even left to do for some of these property sets? And so Stephen, my business partner today, had done over 100,000 renovations in the multifamily space with a large company. And he said, well, the only thing that's not been touched is the closet. And that led me on a path of about an 18-month journey to see if there was a business model that could be had that would allow for low cost, out of the pocket with immediate impact and be able to obviously affect the NOI and ultimately the asset value of the property. And that was a number of years ago now.
Wow. Well, let's just get, right to that there. I mean, what have you seen as far as, operators being able to achieve, increasing the, return on that kind of investment?
So the average, we work with, and I'll just preface, we are just now moving into smaller group sets. So we work with big companies right now. UDR, the Harbor Group, Nightvest. These are companies that have 70 to 150,000 doors. So they're quite large. So when I talk about this, the nice part is that these big guys are validating what we're doing. Our average client post-COVID, and that's an important factor these days, is between a 3 to 5% rent increase. Average ROI is 33% after about 3 years. And so they're seeing a strong play there, but more importantly, it's the investment dollars. Our average client will spend on average about $750 to, depending on the size of the closet, between $750 to $1,000 per unit, just to kind of give some numbers there. And this is nationwide now. That's installed, Whitney. So, so you can do the math real quick. Our average client sees about a $35 to $55 a month rent increase as average.
That's some good numbers there. So, as the listener, they can really think about, obviously it wouldn't be maybe exact for their property, right? But it's some good numbers to be able to think through. Is it worthwhile? Help us to think about, who you're talking about working with some smaller companies. Now I'm glad because we don't have 75,000 doors yet. But tell us about that client though, that, maybe they have 500 to 1,000 doors. Is that somebody you're working with now? And is that an option for them?
Absolutely. So one of the things that we started doing was we realized that if we wanted to scale up as a business and being a manufacturer, which we are, that we needed scale. And so some of our biggest clients have taken us within 1 year. What happens, Whitney, is a lot of these guys will come in and say, let's test market. And they'll test market with a couple of complexes and so forth. So a number of our clients have got us into 15 markets within 1 year. Because what happens is they start working with us on their existing property set, and then they start pulling us into their acquisitions. And as you know, right now, acquisition activity is really high. And so literally we're getting calls from our clients going, Are you here? Are you here? And so we really needed to be in some of those markets to get scale. So for us, we're now able to go and service a lot of the smaller guys that may not have the volume play yet that the larger groups do. So it took about 3 years to get there, but we're now in 20 something marketplaces and growing very rapidly on that.
Nice.
So,
well, let's dive in a little bit to the operations component. And, when does someone contact someone like yourself? How do we go through renovating closets? And, and maybe we talk about, how long that process takes.
So really good question. So there are a couple different ways, and I'd like to definitely expand on this with some of the listeners, because some of the ways they're even driven to do this decision to use a closet system is not what I originally came into the market. My immediate thought was, let's just get a rent increase, impact our NOI, get my asset value up, and sell and move on. So for a lot of our clients, what they're doing today is they're either doing it on the make-readies. So they'll do it during a renovation project or something of that nature. They're bringing us in on the turns now, which is really what our original target was, doing the installations on the turn. So as the renter leaves, we come in, we do an installation. It takes about 2.5 hours, what you see behind me, to rip out, install, and then they can see the immediate impact to the rent level. It's a differentiator. So for a lot of your syndication groups out there, the larger guys are leaning on this because it's a differentiator as they walk through with a renter or a potential resident saying, hey, this is something that's an upgraded feature that we have now. But some of the reasons why, from an operational point of view, that these guys are doing it is on the acquisition, where it's they're figuring us into the value add front end now. So we do walks. I've probably done 30 walks this month, or actually, as of last month. Let me take it back. We're early in this one. Last month, about 30 walks with clients where they're looking at what the cost is and they're value engineering us in. And then we'll talk a minute here about the drivers of it, but some of the drivers are beyond just rent increases that are very interesting.
What about, advertising this to tenants? You probably, how does that, when does that benefit? Is it, I know you mentioned a little bit, you're doing rent turnovers. A lot of that was the initial plan of when to do this. Are there operators that are doing it even while tenants are still in, their unit, or is it potentially, as units are turned, that's when potentially people are doing this, or operators are completing this project?
Good question. So we've had both. What we found to be more successful is when they're doing the make readies and the turns aspects, so they can then justify it and then come right on in. What a number of them are doing that's very, I think, clever is they're doing it lease ups. So right now they're finding it difficult maybe to get or justify that rent increase. They'll say, hey, by the way, instead of giving a concession or a month's free rent or prorating that out, what they're doing is saying, look, we're going to upgrade your closet. It gives you more storage space. It's a better looking product. And a lot of them are looking for that based on the demographics. So you're looking for more storage space or resort type amenities. And so they're doing it at lease up, which I, again, find very clever. And that's some of the motivators for retention as well. Some of the others that your listeners should think about, we have a number of clients that use this as a way to, defer profits for a year. So they'll come in and say, we need to do a small project. We need a way we just don't want to pay the tax man today. How can we defer? So they'll defer. And then others are leveraging it as a way to do it as they're getting ready to exit a property. So very cleverly, what they'll do is they'll come in and say, let us put it in 5-10 units, vet out the model. And I know you know where I'm going with this. And they'll say, hey, this is a new program that we're getting ready to launch. And when you buy the property, you can take advantage of this as a new feature set.
Nice. Well, and I wanted the listener to know too that Jim is sitting in a closet right now, and it looks amazing, or it looks perfect. Actually, it's interesting. If you go to YouTube, you can watch this. You can see a little bit about where he's sitting right now, and part of their product anyway. But anything else about closets specifically, or just that process that you want the listener to know? I know there's a few other things I wanted to ask you about, just about business and different things that you've been successful in, even just the real estate market. But anything about, closets specifically that could help the listener to better think through just this opportunity, really, that most likely they've not even thought of.
So I would say that to most of the listeners out there, when they hear about this, they go, there's no money in this. We've seen this, and time again, they'll say, look, we have wire or we have MDF. It's very utilitarian. It works. Well, today's rent class is looking for resort type amenities. And I would say this really plays well in the B to A market. B, we play a lot in where they're trying to increase it. But A's, it's almost a no-brainer. But what happens is that rent class is looking for resort type amenities. They're seeing the Kardashians out there with their closets and all this other stuff. And, it's a way to break out of that conditioning, differentiate yourself, rip out the wire racking that we typically do. We're doing it on new construction now. When we'll literally have groups that come in and say, we saw this a mile down the road that you installed for our client. We just built 6 months ago. We need to rip out our wire racking and put this in. And it's because they said, look, people are shopping and they need to look at what's a marketplace. So we feel that this is the next amenity set that's going to be taken off, like the granite, like the stainless steel, and so forth. From a process point of view, if the clients reach out to us or prospective clients reach out to us, the very first thing we're going to ask for is give us floor plans, let us design it out at no cost, and let us, in some cases, test drive with you and beta test and walk with you on this so that you feel comfortable and able to get those rent increases that you're looking for. So we really do try to look at it from a business point of view than just saying, here's an amenity. I'm a numbers guy. So I'm looking at going, how much are we going to move that needle and make you, and how much does it impact your NOI and ultimately the asset value in your property set? And so we have a number of case studies we've done where clients spend a couple $100,000 and they see a $3.2 million rate of return on our amenity set just based off of rents.
Yeah. Well, I mean, it's at least, wow. I mean, just right there, it should pique your interest as an operator in a big way to at least call you or figure out, connect with you all to figure out if that is something. Are you all nationwide with that?
We are actually. So we have not only installers, but I will say this too. One of the things that we went to market on is a little different. We don't just install, we can sell the product to clients who are doing self-fulfillment themselves. So we work with a lot of clients that say, look, we just want the product. We have a better labor market, or we have a GC we're working with, or a trim carpenter. So we design and then we'll ship them the product. We do that literally every day. We will ship product out to clients all over the country where they can do the installations themselves. They call us up and work through that. And that way, again, we're meeting them where they need us best. And we're a manufacturer ultimately.
Nice. Well, you have, you've grown companies, you've sold companies, and I know you are good at some growth hacks and strategies to scale a company. I know that so many of the listeners would love to hear some of that. I wanted to provide an opportunity for us to talk about some of that as well, because I think we can benefit greatly. But let's dive into that just a little bit. Like I said, you've grown some companies, sold them, been successful at that, and it's just some growth hack strategies. Let's talk about that. But get us started at some things that have helped you be just ultra successful in that way.
I would definitely say that I underestimated the power of the internet at the early stages of my career. And very quickly, as I brought a VP of marketing, I found out that, it can leverage and exponentially grow you like podcasts and things of that nature. So I've been very fortunate there. But some of those growth hacks that I would say are very unique that you should consider is there are definitely some very interesting ways. So I'll give one that we like recently that we're working with. I don't mind sharing this one. It's a company called Cleverly. And Cleverly is a way to engage LinkedIn audiences and expand your LinkedIn audiences at a very nominal cost without you having to do it. It personalizes messages and connects in very quickly. And it's a company that most people haven't heard about, but a lot of the hacks that we're doing is through automation as much as we can through scale. And so one of the things I always tell people is create the process and drive the process, not the people. And that's one way to scale things. I would also say that for a lot of folks out there, some of the one of the best books I recently read is called Blitzscaling by Reid Hoffman.
Blitzscaling?
Blitzscaling.
Oh, Blitzscaling.
By Reid Hoffman. And Reid Hoffman is, if you don't know who he is, he's the co-founder of LinkedIn. And it's all about scaling companies and processes and people. And so I know it's not giving away too many of the hacks, but I would definitely say that that's one. And then depending on your audience, looking at associations. I think we a lot of times forget about associations and networking within the association to see what's going on within that industry and the one we're in now. But there are definitely ways of leveraging that more to gain instant access. So I don't know if that really helps, but those are some of the things that we use internally here even to grow our audience base and scale up. And then the last one is process. So for us, we have to have a large infrastructure, a lot of installers, and the same with all the other companies I've ran. It's all about processes.
How do you document your processes? How do you do that so it's easy to understand, the whole team can understand and follow through?
Great question. So for us, especially being a manufacturer as well, we have processes on the internal side for just that. But for us, what we started with is a base flow chart. So, like a decision-making tree. So for us, it's, if you were a client, I'd go, okay, what information do we need? What are we trying to achieve here in this set of the process? We document that out. And the easiest way to do it is literally a piece of paper in a box and say, if you say yes to this and no to this, where do we go? And you document that all out and you break it into phases. And then what we do is we do internal documentation. We standardize our format, our nomenclature, and we'll say, this is how we do this. And so it's almost like, and another great book is E-Myth Revisited. It's the McDonald's approach. I want a burger to be a burger every time. And so if we're looking at that outcome, we document that way. And so then for us, we break it down, we share it within Dropbox, within each of the departments. So depending on the flow of what it is, if it's sales or marketing or HR, we document that and break that out. And then we have our leadership of each of those groups manage that and keep it as a living document.
What's the tech behind that to make that happen? I know you mentioned Box, but what do you all use to just the tech side?
So if you're talking about, so a couple of things that we use. So for us, being a manufacturer, we use a big ERP-based system, probably not what most of your listeners are going to use to track all of our inventory and everything else.
Right.
But the big tech or the simple tech that we start out with as a startup anytime was, Word and Excel, and then we use Box or Dropbox, and we break it out that way. And then the most important thing is that you're getting adoption by your people to use it. It's one thing to make that product or make those plans. If they're not leveraging that or using that, Whitney, then it's pointless.
Right. Any kind of, task management software like Asana or Trello or Monday or anything like that?
So we use Trello. Well, we tried Monday. Monday's good, but Trello we use as well from that perspective. And then from a project management point of view is what I would say we use that for task management on a daily basis. And then we leverage, again, I'll go back to, we leverage our ERP for a lot of our scheduling and processing. That's a resource planning system. Like for us, it's a NetSuite product or Oracle or something like that.
Nice.
It's going to be probably overkill for what your group needs, but when you're invoicing out thousands of, actually your groups do probably thousands of, invoices out for each unit set, we have to keep track of that and everything else.
So I want to shift again a little bit because you have a hand in a lot of properties, right, all over the country, and I just wonder too, where do you see just the market going in multifamily?
Great
Any
question.
trends?
Yep. So a couple of different trends that we see at least happening right now. So we're launching, and I'll express this because it's something we haven't done yet. We're launching a self-finance program for this. So we are literally getting ready to launch a program that's an unsecured loan to our product in the industry. And so we've been working, I've got a meeting today with Goldman Sachs and these big tier groups to make sure that it's compliant with the first position mortgage or lien holder. And so we're getting ready to launch that program. But what I see happening is through talking with a lot of these groups, a lot of bridge financing going on right now, a lot of acquisition activity really heating up. There's a lot of money on the sidelines that's coming back into the marketplace. When I look at the markets that we're heavily involved in, Dallas, Phoenix, Florida, in your southeast areas, Seattle, what I see happening there is I see the new construction slowing down. I see, at least from my perspective, syndicators and so forth are moving up the class rank, at least from what I can tell. From into B's and A's, and they're in a longer hold pattern just based on the cost of ownership today. It's just, I'm in here in Dallas, and per door for a C-class property is just, I never thought it would get that high. I just didn't think it'd get to $60,000, $70,000, and so it's very,
and that's cheap compared to some.
That is. And then lumber prices are really driving the cost of build to, it's making it, we have clients right now that are over budget $2, $3, $4 million because of wood prices. So
just the unknown of where the price may go, you mean?
Correct. Correct. And so I think you're going to see build go down, and you're going to see the existing just get more in demand, and activity for those groups. And so again, and I do see, like I said, a little bit longer hold pattern, just based on the cost and getting the ROI out.
Any big concerns right now in multifamily?
I think I was originally concerned. I think a lot of us were on where we were on the capturing of rents and so forth for some of these groups, and depending on where you're at in the United States demographically, it has been impactful. We have clients that it's really hindered their abilities. Some are very much on a lockdown pattern right now based on their rent class and what they're able to get in. But I'm hearing out there, at least in what I see, is confidence in the marketplace that it's getting better, that we're through the election now. So there's that uncertainty. Now there's certainty, whether or not you agree or not, there's certainty there. And I think you see the numbers playing out that way. I think your lower level income households, they're struggling still. And I think that's going to be impactful to the property set that they typically would play in or live in. So that's what I'd see. So nothing major. Stimulus package is coming out, and it's impacting the economy as well in a positive manner.
What about, you just being as successful, numerous businesses that you have, I love asking, as you know, because I love that you're a listener as well. But any daily habits that you're disciplined about that have helped you achieve success?
Absolutely. So one of the very first ones that I do every day is I give myself a 1 through 10 ranking scale of how I am, both personally and professionally. So I know how I'm going to impact my group. Every day when I walk in, we have a stand-up meeting at 8:00 every day. It's been with every company. And it's with my executive team, or if you're a small company, it's with everybody. And we literally go around the room. I did it this morning, and I say, tell me from a scale from 1 to 10, where are you at? Typically, they don't elaborate unless my rule is once they get below a 6, then we're going to ask what's going on personally and professionally, because I want my team to be engaged. And we spend more waking hours with these folks that are in our lives in the business side than most of our family time. So it's important.
That's a good point. Yes. Yeah. I would imagine that helps some morale and team building as well.
Absolutely. Absolutely. And it allows us to get our day started off. And then the next thing we're hitting is, what are our big rocks? What are the top 4 things I'm trying to get accomplished today? And we go around the room on that front as well. And then can we help in that? Can we not help in that? And then we have our small tasks, the small fire drills and everything that we're doing and dealing with on a daily basis. The most important thing I always tell my folks at the end of it is, let's get amongst everybody. Let's make it happen, but let's not make crazy our crazy. Let's keep it let's try to control that. So I'd probably say that's one of the daily habits.
Go ahead. What's that?
I was gonna say that's one of the daily habits that I definitely have. And then I'd say one of the other ones to get my day started off right, podcast. I'm a huge listener to business podcast, ones like this here. And it just gets my day started and juices flowing on that.
Awesome. Well, what about the best way you're finding new clients or investors?
So great question. So for us, it's odd, but because it's such a unique, play, reaching out through LinkedIn, reaching out via phone still, the traditional phone set, where we're finding those clients at. Referrals obviously play a role for us. One of the very interesting parts is that our business is growing based on what happens is, as we see our clients start acquiring, immediately we get engaged with the new or the sellers and so forth. We get engaged. And so we're almost brought into other portfolio sets that we weren't really thinking of. And so it kind of spiders out. And so that's a positive. And then clients that are getting shopped by competitors, that's another one where they'll call us up and say, hey, we saw your product in there. Can you tell us a little bit more? Because we were down the street at this property set and we see things happening. So it's a combination of things. I'd say for the most part, it's been our clients who've pushed us out there, or people leaving their companies and they're going to a new company. And they say, hey, I'm over here now. I was over here. I want to work with you.
What's the number one thing that's contributed to your success?
My people. I got to tell you, in every one of the companies that I've ever been involved in, I've been extremely blessed to have. That's probably one of my strengths, I would say, is identifying really great talent that have a strong moral, ethical compass and get shit done. They do. They get it done. And I have a lot of trust in them and faith in them. And so my people, they're amazing. Even in this company and previous companies, I can never say enough about how good the people were.
Couple tips on finding them. I know that's what the listener's wondering right now.
Great question. So we use Indeed. We also use LinkedIn, and then we do internal referrals as well. One of the things I would definitely tell you is it's about really having a defined process on interviewing them and making sure that they're a cultural fit. We actually have a cultural index assessment that we do on everybody. And there's one called cultural index or cultural assessments. There's different ones out there, but we do that. We always leave the prospect. This is one of our things that we kind of quietly say. We make sure they have some sort of homework in the interview. We say, look, go check us out or go find a couple of competitors. Find out how much they're willing to push forward and think outside the box. For us, it's about making sure that they have not only the integrity and so forth, which takes time, but that they have the drive and can think on their own feet. A lot of times things are fluid, as you know. So yeah, we have a pretty defined process on interviewing.
Awesome. I love that. You have to have a process. And the listeners have heard me talk a lot recently about how we've started hiring and going through a book called Top Grading. Some of that. I mean, I would say we used 50% of that book, but man, it helped us so much, through the interview process and just, we used Indeed and LinkedIn and referrals. I mean, I don't know if there was from my last VA hire, I don't know how many hundreds of applicants, but doing some specific things kept us from having to look at every application, right? Helped us narrow it down really fast to like 4 interviews. So could not agree more to just having a very good process. How do you like to give back?
So actually in our offices here, myself and Stephen, we actually have 3 charities that we work through. So one of them is in inner city boxing ring for children that are at risk. So that one is called Ring of Hope. So we do that one. And then there's one called Living for Zachary, which is around cardiac arrest for teens. And one called Six Stones that gives back to the elderly and stuff like that and helps them around the home when they can't get it fixed. So I'd say those are the top 3. And then there was a bunch of others that we belong to. So sure. And then mentorship, I would tell you that people are, our age group, there's a, for myself, I never really had a mentor. And so as I've gotten to be middle-aged, I look at it now and go, boy, I wish there were more mentors out there, people sharing information like we're doing right now. And so that's one of the things that I talk about with millennials. Look, if you need any advice, anything, let's talk. We're not, I'm 44, so I'm not too much older, but most of the mentors out there today are in their 60s and they're great, but they're a little bit disconnected on certain things too sometimes.
Awesome, Jim. It's been a pleasure to get to know you a little bit and just really hear about this business of closets and how that can increase the value to so many operators, so many properties that they probably haven't thought of. I would imagine most at this point haven't thought about, renovating closets and having that kind of return on their investment. But just also, you sharing about your business background and how you can helped us through thinking through some growth hacks and the books and just documenting processes so the whole team is prepared and understands the process. Even your stand-up meeting at 8 a.m. every day, I think that's some great value in thinking through, are you meeting with your team often enough? Are you asking them how they're doing personally and professionally? Because if you're not, you're probably missing out on many opportunities to help them personally, but also grow your business professionally. So Jim, appreciate your time. Tell the listeners how they can get in touch with you and learn more about you.
So they can reach out to me at J Monk, M-O-N-K, at CLOZZITS, and that's CLOZZITS.com, through our website, clozzits.com, or you can always find me on LinkedIn. Love LinkedIn.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com. for free material and videos to further your success.